Bitcoin has made a dramatic comeback after a recent plunge below $80,000 per coin, sparking fears that the cryptocurrency could be headed for even steeper losses. But now, the Bitcoin price has climbed back to around $85,000, though experts war it remains at a critical juncture as a perfect storm sweeps through the crypto market. One of the biggest developments shaking up the crypto space is the record amount of withdrawals from Bitcoin exchange-traded funds, or ETFs. Despite this, BlackRock, the world's largest asset manager, has made a groundbreaking move by adding Bitcoin to its $150 billion model portfolio ecosystem for the very first time. Analysts are calling this a big deal, and for good reason. James Seifert, an ETF analyst at Bloomberg Intelligence, told CoinDesk, "This is a big deal because this is the first of those models to add Bitcoin. And it probably won't be the last." BlackRock is allocating 1% to 2% of its target allocation portfolios to the IBIT iShares Bitcoin Trust ETF. These portfolios are designed for investors with a higher risk tolerance and allow for alternative investments like Bitcoin. This move is particularly significant because BlackRock was a key player in the campaign to get a spot Bitcoin ETF approved in the U.S. in 2023. After a long battle, a fleet of Bitcoin ETFs debuted in January 2024, and they've since become some of the fastest-growing ETFs in history. In fact, U.S. spot Bitcoin ETFs broke $100 billion in net assets for the first time in November, with BlackRock's iShares Bitcoin Trust leading the charge at $48 billion. This ETF gives investors exposure to nearly 600,000 Bitcoin. Michael Gates, lead portfolio manager for BlackRock's Target Allocation ETF Model Portfolio Suite, wrote in a recent investment commentary, "We believe Bitcoin has long-term investment merit and can potentially provide unique and additive sources of diversification to portfolios." This statement underscores BlackRock's confidence in Bitcoin as a strategic asset. However, not everyone is convinced. Seifert pointed out that Bitcoin remains a divisive asset, saying, "I don't know if or when they would add IBIT to their primary models that have a lot more money tracking them." This highlights the ongoing debate about Bitcoin's role in traditional investment portfolios. Meanwhile, global adoption of Bitcoin continues to gain momentum. Last month, Abu Dhabi's $1 trillion sovereign wealth fund revealed it purchased $436 million worth of BlackRock's Bitcoin ETF during the final quarter of 2023. This move has kicked off what some are calling a global adoption race, with calls for the creation of a strategic Bitcoin reserve to help reduce the U.S.'s spiraling national debt, which is nearing $36 trillion. The recent Bitcoin price rebound comes as the latest U.S. inflation data, measured by the Personal Consumption Expenditures, or PCE, index, met expectations. This has boosted hopes that the Federal Reserve will resume its planned series of interest rate cuts, which could further support the crypto market. For now, bullish traders and analysts remain optimistic, but the road ahead is anything but certain. So, what does all this mean for Bitcoin and the broader crypto market? BlackRock's endorsement is a major vote of confidence, but the divisive nature of Bitcoin means its future remains unpredictable. As always, investors should tread carefully and stay informed. That's all for this update. If you found this breakdown helpful, don't forget to like, subscribe, and hit that notification bell for more insights into the world of crypto and finance. Thanks for watching and stay relentless.